Cost-volume profit CVP analysis is not the same as break-even analysis. Rather, break-even analysis is a subset or component of CVP analysis. While the terms are sometimes used interchangeably, CVP analysis is a broader financial planning tool. CVP analysis is a method used to evaluate the impact that varying levels of costs and volume have on a company's operating profit. It is a comprehensive analysis that examines the relationship between sales volume, costs, and profit to determine break-even points and profit targets. CVP analysis considers various factors, such as sales price, costs, and sales mix. Running a CVP analysis involves using several equations for price, cost, and other variables, which are often plotted on a graph. Break-even analysis, on the other hand, is specifically focused on identifying the sales volume required to break even. The break-even point is the number of units that need to be sold or the amount of sales revenue that has to be generated to cover the costs required to make the product. It is the point where total revenue equals total costs, resulting in zero profit or loss. Break-even analysis helps determine the minimum sales volume needed to cover costs. The formula for the break-even point in units is fixed costs divided by the contribution margin per unit. In essence, CVP analysis is a more extensive framework that includes calculating the break-even point as one of its primary applications. Beyond just the break-even point, CVP analysis can also be used to calculate the contribution margin, determine the target sales volume needed to achieve a desired profit, evaluate the margin of safety, and analyze the degree of operating leverage. The contribution margin, which is the difference between total sales and total variable costs, is a key component in both CVP and break-even analysis. For a business to be profitable, its contribution margin must exceed its total fixed costs of production. Therefore, while break-even analysis is a crucial part of understanding a company's cost structure and sales requirements, CVP analysis provides a more complete picture by exploring the impact of costs and volume on profit across different scenarios, not just the break-even point.